Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, December 9th, 2019. In this video, just want to update, just wrapped up a video on the broad markets covering general stock market analysis, but I also wanted to update just kind of that roughly eclectic mix of various asset classes, securities, and anything else I'm watching. Not an all-inclusive video, just some of the things I've focused on lately. I'm going to lead here with natural gas. There's just you continue to see a lot of questions, a lot of posts and analysis, and people trading it in the trading room. Great, more power to you. But I've had several inquiries over the last week. Towards the end of last week, and my response has been pretty much the same, is that I don't have a good read on the charts. Natural gas, I know it's almost addictive when you start trading it, because fewer securities, especially single commodities, can put so much money in your pocket so fast. Natural gas moves quick. Daily gains and losses of 3-5%, sometimes even 10% or more are not uncommon at all. And because of that, it can again be very lucrative to trade it, but it also goes the other way too if it goes against you. So you got to be careful. Now, so natural gas at times to me is one of the easiest vehicles to trade, and puts probably more money in my pocket than any other asset class when I have a good read on the charts. Now, when I say I have a good read, there are times, everyone has different trading styles. I look at certain things, as you guys know, price support levels, trend lines, divergences, all those things are a big part of my analysis. So others may see something that I don't see, but with natural gas, or really any security, if I can't make a clearly bullish or bearish case, and there are times where the charts just look like a mess to me. It just looks like those paintings where someone just splashed paint up on the wall and it's just kind of random, and that's what I see right now. There's just not a lot, at least the way I'm looking at the charts. I do see some divergence here on the RSI. You can draw a divergence line right here, but I don't have it on the PPO. And again, these are things I've answered, and I know that a lot of times my replies to others get buried, but I just wanted to say that. So let's move on. What I do at this point is I wait patiently, whether that takes days, weeks, or even months for the charts to set up. I like these. Here's where the chart was set up. Nice, clean, bullish falling wedge, a well-defined downtrend line in which to trigger a long entry. A trend line there, and a lot of trades here, long and short along the way. But lately, again, the charts are messed, even the weekly charts and the daily charts. So I'm going to move on. I just wanted to say that. And again, you feel free to bump me as often as you like if you're a member of the site. In the trading room, if you want an opinion on something I'm not currently covered, you want an update on NG or natural gas or UNG, just let me know. And I do my best to, if I don't have a strong opinion, to let you know that, because I would be doing a disservice to anybody to always render a bullish or bearish opinion if I didn't have a strong one. So in trading, I've learned, be patient, take the best looking setups, and pass on everything else if it's marginal. Trading can be tough enough, so you want to cherry pick your trading ops. Enough on that. Let's just move on. I've already covered crude extensively today in the previous video, so we'll skip over crude. Another question that I had in the trading room regarded Treasury. Somebody asked, Randy, I've seen your posts on Treasury bonds lately. I've been posting on ZB. It's above support. What do you think about a long? Well, my answer to that also was I don't have very strong convictions. Number one, I do think it's objective. That was my reply. Look, you can go long on or around pullbacks to that 157.55 support level with a stop not too far below. If you do that, I would give it a little bit of downside, a little bit of room below there, because one scenario that's quite possible would be a break that level. The market makers love to clear out stops. See, it's a well-defined level. I'm sure others are watching it, not just me. And so I could easily see a break below. Now, what that would do is give us a divergent low if we reverse. Now, that's a big if. You break support, it could be a breakdown that sticks. But if we shot down, it's relatively brief, and you recover it, that would be a bullish scenario, because then we'd have, which we already had, by the way. We had positive divergence right here. We had a slightly lower low. Even if it's an equal low in price, as long as you have the indicators making higher lows, that's still positive divergence. So you did have it there. You had that slightly lower low, and we could extend those divergences and still do that. So if I had to be one or two right now, long or short, I would most certainly rather be long. But number one, I just, from the look of this chart and the daily charts, I don't have a good read on how far it might go. I can tell you this is the next pretty solid resistance level up here, or pretty decent. There's going to be levels along the way, but I just wanted to say that. So, and of course, the other part of that reply to TLT or ZB. TLT, by the way, is the ETF, guys, for the 30-year Treasury bond. Is that I've been posting those updates more so to align with my analysis on the stock market. In other words, if treasuries hold this support level as they have so far, and we start to move away from here, then that could be a tell for the stock market, because smart money will sometimes, you'll either see a concurrent rally in treasury bonds with a drop in the stock market, or at times you might see the stock market continue to rise, but then treasuries start to rise, and that is often institutions and smart money moving into treasury bonds in anticipation of a pullback in the stock market. So I just wanted to say that my convictions aren't super strong, but I think it's a level worth watching, because if we break it with conviction, go on down there, burn through the divergences and all that, that's going to be that should be net bullish for the stock market, and it'll probably negate any more downside. I'm looking for a little more pullback after today. We had some short-term breakdowns on the 60-minute charts I highlighted in the video that I just finished, and so that's CB. That video is uploading right now. Let's go to GC. GC is, oh no, I don't need to type it in here. I already have a chart of GC down below. Let me grab that for you. And the same story here. We have a pretty decent, it's not a super solid support, but it's decent. It's this level here, about 1458 right there, and you can see GC's been holding above that level. Now, like treasury bonds, it could take another jog down. In fact, we didn't hit it again yet, but we're still above it. And if it goes a little bit below, sure, anything much more than that, that's not going to be good. Resistance, if it does rise from here, if you want to go long gold, 1488, I can tell you, not this is a follow me site, not that it should affect your position, but I don't have a position in gold right now. Not in a trading account, any active trading positions, because again, my convictions just aren't high. Here's the thing, it's chopping around. It's in this range right here. Before we were in this range right here. We had a little brief pop above, a little brief pop below, but a pretty well-defined range. And those ranges, what you can do is go long down towards the bottom, or if you're short, cover and then reverse and then hold out for move up to the top and respect a break. Sometimes you get these failed breakouts like this and this, but typically when you make an impulsive break above or below, then that's a breakout, especially if you've been consolidating for a while. That's like building energy, like a coiled spring. Just like here, we finally broke down and boom, sharp drop. And so that's my outlook on gold. So you can watch those levels. Watch this trading range here. We're close to the bottom now. So if I had to be one or the two, oops, there's that video just got uploaded now. If I had to be one or the other, I would be long gold right here with a stop, a little bit below that 1458 level. But the optimal place to buy it is closer to that level you can get it, the better. And again, this chart I don't see a lot on the indicators. The daily chart doesn't tell me too much. Gold is still in a multi-month. It's been in a 4-month consolidation range. We're towards the low end of that range right now. No buy signals. The intermediate term trend, near to intermediate term, is bearish because the trading range here, I'll show it to you if you haven't seen it. Go to GLD. And you can see, strip away everything, all these trend lines, and this is gold. So the primary trend is bullish. It's that symbol. Let's not try to complicate things. We have this uptrend here. We had a period of consolidation there, just like this. And I believe that's what this is, but I may be proven wrong. We had the next leg up, and we're consolidating, just like we did back here. And I think this is where we go, and we'll have the next leg to the bull market. It's probably coming sooner than later. Longer you consolidate, again, if we break to the upside, bullish, and it's like building, a coiled spring, building energy, just like when we finally broke out of this trading range. Look at that run. Quite the run from gold. Once it broke out, it rallied in a period of about 3 months, about 20%. And if you're trading the miners, I know there's a lot of buzz in the miners, you get more bang for your buck. When gold broke out of that range, GDX broke out of a comparable range, and it rallied about 50%. So I always say this: trading GDX and the miners is simply a leveraged trade on gold. If you get the call on gold right, more often than not, you'll make more bang for your buck. give or take about a 2-to-1, sometimes even a 3-to-1 leverage factor, if you will, but it cuts both ways. So there it is, and I just did an extensive update on gold and the miners last week, so no reason to get too deep into the charts here. Okay, MJ, there was some buzz in the trading room, some people trading the marijuana stocks, some charts. Someone asked my opinion on CGC. Oh, tongue twisted up. Canopy Growth Corporation broke out. They asked Randy, is it a breakout today? And yes, I had a trend line here, impulsive green candle through there, but I'm skeptical, and I looped them back to a comment that I made earlier. I saw some posts on the cannabis stocks. So my post was this, and I posted a chart. Look, yeah, there's some cannabis stocks moving today, but this is the sector ETF. This was first to market ETF in the cannabis sector, MJ, so I use this as a proxy for tracking the sector. And you need to be careful when you take breakouts on individual stocks if the sector itself hasn't broken out or is approaching resistance. So you have a pretty nice downtrend line right here, and so a nice lift today, about a 3.3% rise in MJ, but right to downtrend line resistance. And if it takes out that downtrend line, you can see these potential targets here. And look, I think it could break out, but I could equally see, I'd probably put almost equal odds, and this is what I posted in the trading room today, that it could continue on. These divergences could be extended out. There are positive divergences in place. Maybe we break out now, but I could see almost equal odds that we may want to cut out one more flush out move, take out the recent lows, wash out some more weak-handed longs, suck in some more shorts, and then turn around. Again, a potential scenario, but most importantly, like I like to say, resistance is resistance until unless taken out. So you're at downtrend line resistance, and so that's why me personally, I didn't take the breakout in CGC, nor would I, because you have the sector at resistance. So the potential is there, and these are the targets, and but we need to see a little more work in the cannabis sector before that gets firmed up. And other than that, with the market kind of slow grinding higher, the opportunities lie in kind of niche stocks. I've been saying the same thing for months. What was it yesterday? We had, or Friday, posted a video on trade ideas. Most of those were longs. Signet Jewelers was one of them. At the time of the video, it was right here. I said a break above, 1870 should do the trick, impulsive break. Well, right after that, boom, it did break out. And from there, it rallied about 15% or so into today's highs. And so it's these little niche stocks like this, kind of flying under the radar, that are offering the most attractive risk-reward opportunities. 15% 2 days versus how long has it taken the market to climb 15% from where we're at. Today the SPY, if we go back here, let's see, 15% takes us all the way back to back here somewhere, and we got to go back to February or January before to see a 15% gain in the market. So it's been moving higher, but most of the gains again this year, it's been a strong year, but almost all the gains were here, and if you weren't in it at the lows, then you missed out on most of that. It's just been a kind of a grind higher since. Figured I'd do an update on platinum because I included that in the charts I'm watching today, as well as last week. Remember last week we had a breakdown below the midpoint of the channel, this line here, this uptrend line, and today, this morning, when I posted, we were above it, but as I said clearly in that post and in the charts I'm watching, you have to take it out on a 60-minute closing candlestick, a solid 60-minute close, and it failed to do that. You can see there's a red candle, we fell back. So all that was so far is a back test. So for anyone that might have shorted or is looking to short PA Palladium, it also PA has traded much more in line with the stock market recently than it has with other precious metals. So if the stock market corrects, PA goes down, you could actually add a little minor trend line right there right now, and a break of that, which I think will come, especially if we get a little more downside and we get those gap backfills I talked about in the video I did just before this one. There's some big gaps down below on the indexes. That would take us down at least to that trend line. It really hasn't. It's not a very valid trend line. You had 3 reactions here, but I do think we'll probably have a reaction on it to validate it. And there's a potential with these divergences for a lot more. This morning I measured it out. This drop right here was about a 9% drop off that last divergent high in PA. So I just wanted to mention that there's still, and I still favor more downside in PA because we had, again, this divergent high right here led to that 9% or so drop, and we have similar divergences right there. And if you're not a futures trader, especially even if you are, PA is a big contract. It's pretty heavy leverage factor. It's about $185,000 per contract exposure to platinum, so that might be a little too rich for some people's blood. And especially if you're diversifying, you might have more than that in your portfolio, but you don't want to put 20, 30, 50% or more in a one security. But there it is on the daily chart. It's still, this is still just continuing to set up for what I think to be as a monster short trade when the top is finally in. Big negative divergences here. You had pretty small divergences here, and that led to that big drop back there, back earlier this year. Here's that minor trend line right there. I think if that breaks, you need a bearish PPO crossover to confirm these divergences, but it's a potential there for PA and a lot of downside, or PALL is the ETF. And then what else did I want to cover? Soybeans, did update, posted in the trading room recently in a breakout of this bullish falling wedge right here, and from there it ran up, hit that 896 target. That was about a 2.5%, nothing big but on the futures contract, that's nice profit, and it overshot the 896 level on a momentum field overshoot, and look, closed right back down on it. We're at 897 and a quarter right now versus that 896 target, a little shy of the downtrend line, so that may be a momentum field overshoot. Now we're above that level, so it certainly has the potential to continue to rally, but watch, I think a break of this trend line will certainly, or most likely I should say, I should not say certainly, most likely trigger pullback to where I can give you a couple potential targets if you're looking to recycle back in, or it's being a little aggressive to short it. That's certainly a counter trend trade, but the primary trend's been down. This one's been whippy due to all the tariff talk, and it's impacted a lot of these ag commodities like soybeans. But there's some pullback. There's a pullback target zone right there if you're interested in ZB or currently have a position. I'm sorry, I always say ZB. ZS. ZB are the Treasury bonds. I think a ZB is in soybeans, so whatever, SB. But all right, so that's ZS, soybean futures, or SOYB is the ETF or ETN. I think that's it. Those are some of the things I've covered lately. Let's just wrap it up here. Get this out to you guys, and like I said, we'll watch the markets. It's as we get closer and closer to the holidays here at the end of the month, trading volumes are likely to lighten up again, and you get those whipsaw signals start to increase. I typically start to lighten up on my trading, as I have really since the week of Thanksgiving, and I haven't fully engaged. I'm not doing much lately, and that's something I've learned over the years. Don't force it. If you're not seeing good opportunities in the market or individual stocks, you got to sit on your hands. And the key to this game is not resist the urge to always be trading. Resist that urge of what I call traderitis. Be patient, be selective, and let the market come to you, or any particular stock or security you're trading. Whether you're a gold bug, if you're trading gold lately, swing trading especially, you're forcing it. There's some individual gold stocks starting to move lately, and I like that sector, but again, until gold starts to move, those breakouts or those rallies are only going to go so far. So that's just one of many examples. So all right, we're going to wrap it up here, and we'll pick this up tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great evening.